Hello, hello. What's up, you guys? It's your boss, Joe Boss. And we got a week ahead trade plan stream for you today. So, one thing I'm going to take note of real quick. The title of today's stream. Russian diamonds, yeah. Treasury's target price cap violation. Ban on Russian diamonds. And then you scroll down here. New prohibitions related to Russian diamonds. So all non-industrial diamonds and all diamonds in jewelry or unsorted diamonds. Effective March 1st, 2024. These prohibitions are intended to implement the December 2023 G7 commitments. They already decided on this a while ago. But yeah. Sanction implications. In addition, any entities that are owed directly or indirectly 50% or more. I wish they went into more detail, like how the diamonds are used for some black market activities to help fund Russian stuff. But let me pause the music here, because this reminds me of Grand Theft Auto 4. If you guys don't recall, that's the storyline behind Grand Theft Auto. It's in the intro of the game.
They forget.
That's on the boat Nico Bellic is going into Liberty City with. And you got this cook, and he's putting all these diamonds into the soup to smuggle them. I mean, all of the major plot points in the game are around these diamonds.
Nico Bellic, how is it that whenever something is stolen from me, you're not far away?
I have never stolen anything from you, Mr. Bogdan.
This man, the big Pedic and his Dominican beach, they stole my diamonds. And you have been trying to rob the thieves, to rob me. Conchai!
My diamonds. My diamonds. Oh, man. I remember playing that. It's such a good game. All right, now with the diamond stuff out of the way, a little trip down memory lane. There is some Google news. Maybe we'll check that out, see if that actually has moved. The price. Let's see. No, but it seems like the analyst forecasts are quite bullish. Yeah. The most pessimist analyst, though, is really pessimistic. I mean, only moderately so. So, a lot of what is it? They're expecting essentially high 150s to 170. That's kind of your range where you find a lot of your forecasts, maybe. Because this gray line here is your mean forecast, a year ahead expectations for Google, and this orange is your median. So not that too much skew around here. So a lot of forecasts, because today they announced, hey, you can finally get Google's AI for $20 a month. Yep, $20 a month. Their powerful Ultra 1.0 AI model. Good stuff. Anyways, what we're more interested in is the week ahead expectations. So I am going over a lot of the research right now that's been sent to me over today because every Thursday, Friday, Saturday, research gets sent out. So I'm going over the research today. I'm not going to be going over it on the stream, but we will be following up with some of the trade plans we made earlier in this week and trying to figure out what some of the expectations are for the following week. I have a feeling, just right off the bat, my expectation is that we're gonna just see continuation. Will continue whatever happened this week is likely going to just continue going into next week, and you'll kind of see why. Oh, Biden delivers remarks at the White House. All right, that a little bit, but I'm interested in the calendar here. So it's next week starts here. Japanese PPI, UK unemployment. So maybe yen and pound have some movement there. German ZEW, economic sentiment. OPEC. That's going to be important for oil. So 13th, we got OPEC. From the outlooks on commodities that I've read so far, it seems like even with the Houthis stopping a lot of the movement through the Suez, it's not really impacting the price. In fact, it doesn't seem to be impacting oil supply all that much. So a whole lot of nothing for the oil market at the moment when it comes down to how geopolitical tensions are impacting the oil market. I mean, it's making it more volatile. It's not, the volatile movements aren't sticky. Like when oil moves up $10, it's not staying at that price. It's then zipping back down. It's going up, down, up, down, up, down, trying to figure out if these geopolitical risks are risks that are actually going to stick. And it doesn't seem like that's the case. So, US CPI, that's going to be important. But look at this. CPI next week, expected to come out only moderately lower. Maybe we get below 3% US CPI. Maybe we don't. Again, we're going to have to see how the services component of US CPI is impacting these measures. Essentially, what's the fraction of inflation that's coming from services versus goods here? And if we're going to trust the PMIs as, you could say, a leading component for some basic CPI measures, it doesn't seem like that's going to be letting up, at least any time in the immediate future. If there's a significant decrease in inflation, that is, we shoot past these forecasts, then I'd assume the pricing for Fed cuts in March will have a bit of a spike, and then that will get faded, meaning the dollar should get weak on US CPI outperformance, and then get strong, and then it's after that strong peak that dollar might end up with a trend lower from the middle of March, I'd say, into essentially into FOMC. It'll potentially trend lower. Reason being is because in the 60 Minutes meeting that Powell did, it's essentially clear cut that, we got our eye on cutting in May. Also, the Bank of Japan might hike in April. That's something that yen traders definitely have to be aware of. And if you have assets denominated in yen, that's because remember Warren Buffett, there's this huge move of investment over to the trading houses, which aren't like hedge funds. They are physical trading houses where you physically exchange commodities and goods. And they do actually do trading, but the trading houses are very wide in the services that they provide. And the trading houses made a killing. They made so much money, and Buffett got in at such a great time. Those trading houses rely on quite a lot of financing, and it'll be interesting to see how if the Bank of Japan does their first rate hike in so long, in April potentially, how that might impact those trading houses and whether or not they'll still be good investments or if their profit will stay maintained. We'll see. Maybe we can listen in on some of Warren Buffett's lieutenants if they ever show up on Bloomberg or MSNBC. So, CPI next week, that's going to be important. Again, if inflation beats the forecast, that is, comes lower than the forecast, then we'll end up with a weaker dollar initially, I believe, and then it'll rebound going into stronger dollar, and then that's the spot to trade. And the reason for that little rebound is because of the rest of the week. We have all these other, UK PPI, Eurozone GDP, the rest of the world, while they're doing okay. For example, Australia and New Zealand, their economies aren't doing too well because they are closely tied with China, and China is not doing terribly well right now. They really aren't enjoying the Suez Canal being blocked up here. But it turns out that the amount of tonnage and volume of goods being transported to the United States hasn't changed terribly significantly based on some of the Reuters articles that I've read so far. Actually, no, it's not a Reuters article. There's a Freight News series of articles that I was reading. Let's see here. A lot of low important stuff. Japanese foreign bond and stock investments. UK retail sales. This is on the 15th. We got some Canada news. US retail sales. Yeah. And then on the 16th, US PPI, core PPI. Oh, sentiment. That's expected to come in flat. And then we got a holiday on the 18th. Also, we have Valentine's Day, which is here, February 14th. And it looks like, except if you're in the UK or Australia, it seems like the US is going to have a pretty easy day. And then, except you can't stay up late at all for Valentine's Day because super early in the morning you got retail sales to be concerned about. And you have Philly Fed Index, Manufacturing Index, and then some Canadian information. Yeah, we're going to figure out what the trajectory going into the end of the first quarter is going to look like with this round of economic data coming out next week. All right. With that out of the way, actually, let's see here. Any other news other than Biden talking? Brent crude futures settle up. It's nice. Treasuries drop after strong demand for 30-year auction. Fed's barking. Commercial real estate risk. The risk of deflation seems quite remote for the United States, which is interesting. There's, I believe, Kathy Wood still has a long-term expectation for deflation, like outright negative inflation, over some point this decade. She's been pretty strong on those expectations. Oh, check this out. Upcoming inflation data is likely to be favorable. See, this is why we look at our calendar and look at our squawk. This is something the Fed's paying attention to. Doing our job, guys. Upside inflation risks are still around. Yeah. So if this inflation metric for the US, CPI, that doesn't come down, if it's, again, if core CPI stays at around these forecast levels, that's really not good. We need that core CPI to drop a bit more significantly. And yeah, the headline number keeps dropping, and it seems like it's dropping faster, which is all well and good, but that core number, that core number being a whole percentage point higher than US CPI, that's still not a good outlook for inflation. It's still not a good outlook. That will even if this number slams lower and the dollar gets weak off that, if the core CPI ticked a little low, that'll create a rebound situation. It's going to be pretty volatile if these are the actual numbers that print along these forecasts. There's a certain chance that the ECB won't cut rates this year. Wow. I doubt that. Based off what I'm reading, I doubt that. Okay, let's go to our watch list and check out some of the things here. So this was the first forecast since I've come back and done my streaming. I don't know, you guys. That seems pretty dead on. Yep. Called that the likely low was in. Let's check out our closing odds here. Yep. All's good. And yeah, next week's pretty darn volatile. You kind of have three peaks here. You got this bump here, you got this segment here, and then you got this segment here that's really big. What's that? 36, 38% of your closes next week are around here, so that's a clear risk. This section here lines up with your odds down there as far as equivalence goes. Let's go ahead and check out our closing odds again. That's just for next week. Actually, I do want to check out the low odds for next week. So 30% of the time off the open, you get the low relatively quick. Otherwise, you drop down to like 49.70. That's kind of nutty. And let's check out our high odds. The high odds should be pretty flat. Yep, they're pretty flat here. Pretty flat here, and you got a nice concentrated bump next week. Right around here. Let's see if that actually lines up with our high odds for next week. Yeah, that's roughly the peak for next week as well. Let's check it out for the month. Oh, check that out. It's going to the probability weighted pivot high. Yeah. So probably up to around here. Call it 50-50. Maybe 50-80. I'd say I'd expect the high between 50-50 and 50-80 next week. Because once you go past 50-80, it's a bit hard to tell exactly where your high is going to come in at. You could say, oh, somewhere between 50-80 and 51-60. Well, that's kind of an 80-point move. That's going to kind of be my threshold for this month going into this tail section. At that point, maybe checking out the weekly highs would be interesting, but you can see it's a bunch of guessing. I don't know. Over the last 24 years, we never traded next week above the R3 pivot. So maybe this area right here, right at that spot, if we, I mean, geez, that's saying if we jump up 65 points next week, maybe I'll sell. It's like, you gotta be careful when stuff rises that quickly. There's no assumption needed that a pullback must occur. Again, we're just looking at the odds of getting a high. So I'm just saying, hey, get into this spot here. There's decent odds, but going past here, you're talking maybe you get highs higher than that. So that can be a slippery slope past here. Starting to deal with odds that are very thin and very low over a wide price range. All right, let's check out our low odds here on the ES. And it looks like our seasonal odds line up with our continuous odds here. We got a bump here, lots of lows around here like we did this week. Lots of lows right here. I wouldn't be surprised if the low came in roughly at or above 5,000. So let's do this. And real quick. Okay. That's February 8th. And should probably check out the closing odds, right? So it's probably going to be more neutral again, right? We got those three spots, which is close around here. Yeah. It's probably going to be a short pullback and then immediately a rise up and then close down there. Could be a pretty bad week. So remember when I was talking about the whipsaw when we were going over the economic calendar on the US dollar, saying, oh, the inflation data comes out and it comes out good. So that will send the stock market up. But then that move gets faded because it still doesn't mean that the Fed's going to be cutting. It just means that as inflation is going down, rates are still high. So not only is it harder to get funding because when the Fed keeps rates high, banks have to lend at a higher rate to cover the money that they're borrowing from the Fed. It also means that the amount of money going through the economy is reduced, the total volume of money. That's not gonna change until May. I mean, we may, again, like I said, from maybe middle of March to May, establish some sort of dollar bearish trend in expectation of that occurring. But there's no guarantee. It just would be nice, especially in the case of a strong economy. Yeah. Again, when you start talking about 2, 3, 4, 5 months out, you have to be first, you have to understand what the current expectations are, what the current landscape is. And that's what I'm putting out right now. And then as new information comes in, you have to look at what you were thinking before and update that based on the new information. And the only way you're going to be able to do that and figure out, oh, with this new information, given some relative position, here's how I need to change my portfolio or my approach to this market, given this new bit of information. And anticipating or reacting to changes in future expectations is what makes someone a trader. And if you listen to the smartest people in the world who actually have made more money than me trading, they will all say at some point in some interview somewhere that that is what a trader is, to try and predict the future or anticipate it probabilistically. And the only way you're going to be able to do that is if you try and know it is what you're doing first before you try and step into some hot water. So with this scenario, yeah, this is what I'm expecting. Actually, I want this to be green, and I want this to be blue. Just an FYI. Red is down, green is up, and blue is the color I use for going into the close. So this is where net I would actually think we end up closing next week. Now, unless the Magnificent Seven can hold up the entire S&P, and considering Apple ain't doing so hot and Tesla ain't doing so hot, not all the Magnificent Seven are holding up in there. Yeah. Gotta be careful with, I mean, if you just exclude those 7 companies and you look at the rest of the NASDAQ, or you look at the rest of the S&P, the companies are not growing all too well. So as soon as these top companies stop growing and on decreased inflation, yeah, that's going to hit their growth. That will send, that can send the S&P lower. It can. So this forecast here, it's a bit more quote unquote precise, right? I'm saying, okay, down beginning of the week, up middle of the week, into that CPI or during that CPI, and then after it or during it, go lower. This is a little more specific than what I did last week, which is just, I don't know, up and to the right. So there's a lot more room to be wrong on these sorts of forecasts, but the truth is that it's okay. When you go and make your own forecasts for your own trade plans, it's okay to, from one week to the next, say, I don't really know where this thing is going to bottom out or top out, given these tools or given my expertise in the market that I'm looking at. I don't really know what's going to happen, but I have a general expectation we're going to go up and to the right, or we're going to close in this price range or that price range. range, or we're going to close in a lower price range. And it's just from one week to the next. Sometimes you can get more granular with your expectations. Sometimes you got to get more general. And when you do make more granular expectations like this, that are broken up into, specific components, don't kill yourself, or rather, I should say, don't put yourself down over price not exactly following this direction or line or timing. Because, I mean, I've done these sorts of drawings before, and most of the time I do this sorts of drawing, it's off by, 20 or 30 points, or I'm completely right on the timing when I'm expecting pivots, but I'm totally wrong on the direction. Where instead of down, it goes up. Instead of up, it goes down. Instead of up, it goes, yeah. But the timing is correct. So the pivots are occurring at these exact spots, but the direction is flipped. Or the direction is correct, but the magnitude is wrong. There's all sorts of ways these forecasts can, or expectations really. This isn't really a forecast, it's just what I think is going to happen. My expectation for next week can go wrong in all sorts of little or big ways. It's more important that when you trade, you make these forecasts. So you figure out how good of a forecaster or how accurate your expectations are, how well they line up with reality. It's far more important to just say, hey, I don't really know what I'm doing this week, or I got other stuff going on, but based on what I know, I think it's up. And then some weeks you're more involved. Some weeks you can take more time to read the research, read the outlooks. And so you get a little more granular, right? It's just when you do get more granular, don't take it too personally if you're a little right or a little wrong. You want to have the general idea correct, which is, okay, maybe it moves down here, but net I'm expecting some move up here, hopefully below 50.80, and then it closes either flat or negative on the week. That next week is a red week, or flat, or little small green. Never take forecasts, even from institutions, at total face value, because they're working under the same assumptions I'm telling you here with my little 3 drawings, which is there's sort of a range around these expectations, and these ranges might be very big from week to week. They might be very small, or they might just be a flavor of the month. Like, I could live without making this expectation, because this thing could easily just go up, and then this thing could go up. And this would still line in with an acceptable movement for what I'm expecting next week, which is why I'm trying to not use the word forecast. Specifically because an expectation can be quite dynamic. I have an expectation that net we have at least this general move, and how we get there could be up here or could be like that. I have this general expectation of how the market should react to CPI. And then I have this expectation of, okay, if things really blast off during CPI, it's just going to go up and away to the mid 51s, or potentially even top out right here, maybe go just a bit above it and then come down. There's all sorts of chaotic ways the market can behave. And it's never in your best interest to try and have pinpoint precision accuracy with every single expectation you have of the market to perform. So a really good thing to review now that we've done this week ahead trade plan for the ES. Let's follow up on the dollar yen. This one was actually quite interesting. So the dollar yen is up 115 pips today, which is a really, really good day if you're not an FX trader. So this is what we put on. I did a trade plan about this in my last stream. Check this out. We just got wicked off that. Isn't that kind of crazy? Here, I'll go to a replay. I think we did something along these lines. Yeah, see, we were buying this. We put the stop right here. Obviously, that wasn't enough space because on the next bar, I mean, even if you put the stop down here, there's a very good likelihood that would have been hit. And once this got stopped out, I just stopped looking at this trade. I don't get enough leverage to trade yen anyway, but I would have liked this to work out because this trade ended up performing phenomenally. And I believe I mentioned the scenario of getting the high up here in the stream over here when this trade plan occurred, saying this is a real risk of still going up here. I'm almost, I'm like 95% certain. I said something when I was doing the trade plan about dollar yen, about us going up here. Let's see, was there also, yeah, there's also good closing odds up here. We're going to just end up closing flat. It's going to come down. And yeah, that was a nice little trade to show off. Now I say it's a nice trade specifically because everything lined up. The risk management was good. The risk management there was exactly correct. At least for this approach that I'm using. You know, I wouldn't have wanted to put my stop here or down here because now look, you're getting a 1-to-1 risk to reward. Like that's not a good trade. However, if I got stopped out here and then I saw this candle come in green, maybe I could have entered long again here, put my stop at the same spot. Maybe it's a more suboptimal trade. But you know what? That's still 100 pips. It's still 80 pips, depending on the inefficiency. Like even from here, that's roughly 80 pips. From here, that's 120 pips. So depending on, like, if you just got one, we're in this 40 pip range, it still would have done a-okay because you can say, hey, there's still a shot that this thing goes and closes higher. Yeah, going into end of week, I think this will pull back, though. So, yeah, that was an interesting little trade. Again, you don't win them all. It's just important you don't kick yourself for getting these little things. Don't let these little things try and trip you up. Because I still was able to trade Aussie dollar. And Aussie dollar has also followed the trade plan pretty much to a T. And by to a T, I mean it hit the exact spot I was forecasting us to hit the high on for that day. And I just took it down for the rest of the week. So I was like, oh, that looks good. I think that might have topped out there, so let's go. And then we can check out the high odds on the week. There you go. There's your high odds on the week. And if we check out our closing odds, yeah, don't get me wrong, this, like the dollar yen, could end up rebounding to call it 65. You know, it's just below 65 right now. But let's go ahead and check out next week's odds. Yeah, next week's odds are pretty conservative. A lot of your closes are pretty much flat inside this range here. Let's check out the low odds here. Wow. It's like 70% of the time the low next week is below this S0.5. So pretty decent chance of getting a move below this line here. I believe this was the threshold for the month. This longer blue line here. Let's go ahead and check out the low. Yeah. Gotta be careful next week for sure. Gotta be careful. Let's turn on the seasonality. The seasonality is still quite good. Today was supposed to be bullish trading day and it didn't pan out at all. So I would be careful about following seasonality going into next week. Yeah, again, a lot of your lows come in here once you go past this spot here. It's kind of no man's land. Gonna end up probably there or there. Isn't that kind of nutty? We got a bump in our probability distribution of where lows occur next week right here. If I hide this indicator, it'll be a little easier to see, right? We got our bump for next week. And that lines up with the seasonal probabilities here. The one time we've closed very far down next week. It goes all the way down here, sub 64. That would be an insanely great payday for a trade from here. It's 150 pips in about a week holding time. That's pretty good. And not to mention the guys holding from here and from here. And we're getting short on this thing. It's just been holding short since the beginning of the year, some people. So next week, there's clearly going to be a risk of finding a low around here. But continuation odds, this is just the tail scenario. That's definitely on the riskier side of things. Check out the cones on the day. Yeah, maybe you'd have to spike it real fast. And I don't think the volatility is increasing. I actually think the volatility might be decreasing. And let's check out our yield spreads here just to make sure we're on the right side. Yep, yield spreads are still red here. Oh, and if we go back to that USD yen, green, which is kind of the premise of the long there. I saw some research out of Westpac today saying that they're actively looking on Aussie New Zealand. They're looking at the 2-year. Wow, look at that. Crazy. Look at that transition right there from green to white to red. This is your transition spot. Oh, and there's your technical high, lower high. Here's all your momentum indicators flipping around this spot here. And it's this big old momentum sell-off right there. That is a relatively easy trade. It hasn't been easy trading pretty much for all of December and a good chunk of January. That's not the easiest thing for trading, but this is pretty darn easy. This is sketchy. But yeah. We are moving in line with the yields there. I could look at more FX stuff. I just want to focus on the ones that I made forecasts on. Check out the dollar. Pretty negative expectations on the dollar, which is kind of counterintuitive to, hey, Aussie going down, dollar yen going up. But see how the dollar itself hasn't moved that crazy? And also, look, there's some arrows here that are wrong. Right? Oh, well, I mean, technically, this is another magnitude problem, but the timing is correct, right? Moving down, and then here, moving up into the close. So, expectation of going down to this price was wrong, but the timing of these rotations is correct. Again, you can't necessarily, check that out. Hey, we're getting our high up to here. And that happened. We came down. Now we're going up. But it seems like I want to check this out on the month. Where are the closing odds here? Pretty flat. Well, if inflation comes in significantly, or at least a tad above expectations, that might make the dollar a bit weaker. Again, it might seem a bit counterintuitive. Pretty flat seasonality. Again, still decent odds of finding the low here for the month. So let's be open. Yeah, it doesn't seem like it's going to happen next week, though. Let's hide the cones real quick. And I want this for the week ahead. Yeah, it seems like most of your lows next week are going to end up around central pivot S1. Yeah. So let's set our expectation here. For some kind of move lower. And then let's look at our high odds. Wow, that is quite bullish. So here or here, that might be an interesting call. Let's see if that lines up with our expectation. Yeah, there's a big cluster of highs around here. Call it 1047, 1048, 1049. So 1047, 1049, this 20-point range here. Actually, we want the closing odds now. It'd be one volatile week. It might just be more conservative too. Right? A bit more volatile, a bit more like that. That is a big probability there. And check that out, 43% of the time we end the week between these two prices and this, call it 35-ish point range here. That looks good as far as trade planning goes. So yeah, this, I try not to delete lines, but this is just kind of now not what I'm expecting. So just because this is a recorded live stream where you can actually go back and see when I've deleted stuff, I'm not going to delete these. I just wanted to get rid of that one that was just drawing multi-week expectations. It's like, don't like that. Let's go to gold. Let's see here. Any drawings on gold? Maybe it's on XAU. Yeah, there we go. There's XAU. I think that's another hit for Mr. Boss. Came down, right? And went up. However, I think this was a day ahead forecast, right? Yeah. So this forecast was just wrong. The thing just went up, stayed up. It went to the expected price at the expected time, but this juncture was missed. So this trade wouldn't have been entered. That trade was missed. But we'll probably end up closing sideways by the look of things, below 2040. And next week seems like a volatile. Eesh. Look at all these flat odds here. Flat odds. There is a long around here. I wonder what that's about. Maybe it's something on the month. No, month is expected to have a more sideways close. Oh, it's this spot. Gotcha. I'm not too sure if this long is going to hold. It might be prudent to have some expectation of higher prices. Yeah. It's definitely going to be more prudent. Because look at this. Big probabilities up here. Now, don't get me wrong. That could still be the high for the month. But in my opinion, one of these things have to give. Either this low or this high has to give. I'm pretty sure we're going to go to either this low or this high. And looking at the odds, I'd say it's a bit more likely we go higher for the month. And next week is a very bullish week. Holy mackerel. Those are some very bullish odds next week. Yeah. So this is definitely up based off those odds. That's pretty high confidence up. And you would definitely move up here if, because a lot of people still think gold is an inflation hedge. If inflation headline came out better, well, that is the absolute level of inflation realized at next week's CPI was greater than the forecasted estimate of CPI, then yeah, we'll probably end up here. It'll be interesting over the weekend to read what some of the forecasting community thinks CPI will end up at. And a lot of closes up here if you do get up here. So, potential little just drift lower. That looks reasonable. I don't need this. I can reuse this. So, something along these lines here. Yeah, something like that. And that would probably lead to a higher high. No. probably lead to a higher high at that point. So this could get swung. Yeah, this definitely could get swung. Let's go ahead and check out what, not next week's, but this week's, 2 weeks from now, what those odds look like. If it's also a considerably bullish month. We want to turn off the auto setting here. So next week is week 7. We want week 8. We want 2 weeks into the future. And there's definitely some more downside risk, so it's not as bullish. Wow. Pretty skewed odds. Yeah. Yeah, the sell would probably be 2 weeks from now, around this spot here. That makes sense to me. That makes sense. I'll go ahead and pop that in. Let's see. Probably 18 points. So let's lock in 20. This is kind of a far-fetched reach. Because for all I know, this thing could go down, down, and then up again and essentially create a range, right? Up, down, down, a retrace, create a range. It can do all sorts of stuff. But let's leave it like this for now. Maybe it hits the monthly target along this sort of trajectory. Maybe it doesn't. We'll see. The important part is to figure out when you do make sets of expectations, given the information you have at a given point in time, how frequently do those expectations line up with what actually occurs? And maybe between now and CPI, or just after CPI, some new information comes to mind that makes me set a new, 3 or 4 arrows of forecasts, or 1 or 2 arrows of forecasts, or rather expectations again. Not forecasts, expectations. Because these change quite a lot. This is just, given the tools that I'm looking at, what I'm currently expecting. Wow. Oil. You guys, just sometimes you knock it out of the park. Sometimes people say, oh, that could never happen. Oh, why would things change so quickly? I think word for word, my commentary was, it creates a V. And it just created a V. And we're going to go higher. We're going to go higher. The future, we were just reading Financial Juice. The futures closed at 51, which is up here. Again, the futures, I forget what expiration that was. Yeah, we can set a new forecast that it does something like this. It starts to slow down, and then it stops at around 80, 81. I'm going to draw a box for this. This is the zone. And let's also put the timestamp in here as well. So then I know when I made the box. Okay. Actually, I do want to scrunch this down one more bin. Yeah, that's fine. All right, let's check out next week's. Oh, Oh man, check that out. The probability weighted pivot high is exactly what I didn't even notice that. I drew this expectation here on the daily, and it's lining up here with the week. Yeah, okay. Oh man, oh man, yeah. So that's probably gonna end up being the top next week. I mean, that has the greatest probability. Oh man, it's not showing up here on the continuous data on the range probabilities, but you can see that's the edge of this slippery slope uniform section of the distribution. Again, you gotta be careful. Gotta be careful. Let's try back adjusted. Yeah, not that much help there. All right. Net gas, Bitcoin. And Bitcoin's up, up, and away. Fantastic. That's probably going to be the high. No. Yep, it's probably going to be the high. In the last 13 years, Bitcoin's this particular week has not gone past that R3 pivot, so would not be surprised if that was the high. We can set that there. And next week seems to be a bit more conservative, generally speaking. Look at the low odds now. Yes. So somewhere to the mid 63s over here. Where's the arrow? Again, just into the early part of next week is all. And now, let's look at our ranges. Yeah, that's definitely doable. How about for today and tomorrow? Oh yeah, that's right. We got a kind of bell shape on our crypto. Oh, let's check it out for the month. Yeah, big upside skew for Bitcoin. Yeah, you got to be careful past 48. Past 48, you're dealing with more guesses. So, probably likely some form of pullback or just drift lower by 1 or 2,000. And yeah, we can also check out the cones on the month. Essentially, it's come back down sort of to the mean, roughly around here next week, and then pop up again. And then, yeah, we definitely have an established trend here. You know, it would be nice if I could have the log curves. That wasn't that a great call, this drop here. From August 5th, the expectation was to drop here. And it's a sideways, sideways, sideways. And it went to the exact point in time, the low. Yeah, it's one of the reasons why I don't want to remove these arrows. Oh, check that out. People are going to talk about that dip in Bitcoin yesterday for a long time. Calling out the low. Yeah. I know what I'm doing. I know what I'm doing. God. Yeah, that was 20K. We're now 150% of that. Or 125% of that. I mean, that's so nice when people are like, but Joe, what do you mean this and what do you mean that? I'm like, guys, it's on the chart. Guys. I mean, don't get me wrong, look at this crazy stuff. Down, down, up, down, up. Not all the time is it correct, guys. But man, when you're wrong on your expectations, also, this was made on the 1st of January. That's nice about having the timestamps. I can go and look at a date, say, hey, here's the 1st of July. These are the forecasts from the 1st of July. Obviously, something changed here. And then you can see it in the forecasts. We had more bullish expectations immediately around here. And then as this drifted lower, the expectations started to change. You can now see my forecast started to change. So somewhere between here in July and I'd say roughly around here, around the end of July, my expectations changed. And it's important to keep track of your expectations. Oh, wow, that trade's already in profit, huh? Yeah, that trade's already in profit. That is if there was no spread and da 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 da. Well, we'll follow up on this and see if it does anything. Let's see. Did I miss anything? Did I make a forecast on CAD? That was to go up and away. That trade didn't work out, this euro-dollar trade, right? Oh, but this one did. So that little tiny one didn't. That one's still doing a-okay. And let's see, that was New Zealand. I can't tell if that one is still in or not. But I'd be careful with New Zealand. I'm reading some outlooks that are pretty bad on New Zealand. They still have good expectations going out into the future, but it's really dollar side heavy. Also, demand for milk powder, whole, I forget exactly what it's called, whole milk powder. It's New Zealand's largest export, and it goes to China, and China's demand for this milk powder has been decreasing and decreasing and it's been decreasing for a long time. And the good part is that the surplus from COVID of their milk powder is now they've now finally gone through most of it. In fact, there was a point in time where they were actively destroying surplus because of how much it was disrupting the market. So now they're no longer destroying surplus, and it seemed like the expectation was is that there would be some rebound here. You can actually see New Zealand is holding up relatively well compared to a lot of other assets in the FX space. So maybe there's some hope going into March for New Zealand to do better. Let's actually pull up. Yeah, check that out. So there's your probability weighted pivot low. Maybe there's still something here in the cards. It's still quite a negative drift. But even if you could close a bit higher, like if you could close green this month, then guess what? Next month's going to be a bit easier for the New Zealand dollar. I'll look at New Zealand dollar. And next month, a bit more seriously for kind of swing ideas. Yeah, you could see, wow, check that out. It's like 80% of highs are way up here. So there's still room this month potentially. And next month also looks quite healthy as far as upside expectations. Again, these are seasonal values. And yeah, right around there. So maybe towards the end of the month, if it grinds higher, it's going to be volatile and potentially super choppy. But I'm going to check out the rest of the month and part of next month for any major New Zealand news. Because maybe you end up with this situation here. And I would rather be on this trade than not, because that's 150 pips. Maybe it takes a week and a half for that to play out. But before end of month, hopefully New Zealand gets a break here. And if it does catch a break here, that would be exceptionally good. Also, I did this here in January. You can see that was a failed set of expectations, right? That was just totally wrong there. It was correct. Totally wrong. Totally wrong there. But my end of month expectations were effectively the same. Either you getting your bearish closes around here or your bullish closes around here. And we had the bearish close, so we ended up around here. So even though my week ahead, 2 week ahead expectation was wrong, my month expectation was correct. Either bullish closes in here, bearish closes in here. And I was still naively bullish at this point, it looks like. So looks like I didn't capitalize on this enough, man. When you're wrong here, you gotta update your expectations. I mean, look at these yield spreads. Pretty darn bad. They started to turn white here, and then a little green here, a little more green right now. So if these yield spreads can hold up, and on the short end, they are holding up, and on the long end, they are. So maybe by the beginning of next week, this second curve starts improving. Possibly during USCPI or after USCPI. Maybe that's when we see some New Zealand information come out and bring some relief. Otherwise, it could be a little difficult. Again, pretty good seasonality on the day to day, but you just gotta be careful with the seasonality. I mean, yeesh. That starts to get pretty bad going into March. So, yeah, that lines up with the seasonal expectation too. So, I'm going to be looking at these dates that you usually get bullish expectations and bullish moves, and see if there's any significant economic events for New Zealand on these days. Otherwise I'm going to try and not get trapped in here in case these spreads flip and reverse. Again, how CPI comes out next week is essentially going to set the rest of trading for probably the rest of February, first week of March. So there's probably going to be some swing potential after CPI comes in. So we'll see. All right, I'll go ahead and end the stream on that note. Hopefully you guys enjoyed the commentary and the breakdowns and the whatnot. I'm gonna try and do these every day like I used to. I remember there was like a 3-month period I did the streams every day except for weekends. And I'm gonna try and get it into the habit of doing the streams Monday through Friday again for an hour and a half. Yesterday though, I was just super busy. I was taking care of some real life things. Anyways, leave a like. Tell me what you liked in the Discord. And there's some outlooks I'm gonna be covering probably in a Discord group. So if you're in the trading group where you get access to these indicators, I'm going to be kind of doing a literature review for the week ahead, probably sometime tomorrow or later today. So if you're into actually figuring out what's going on in these countries and what the current expectations are from different institutions, that sort of stuff, you can hop in the trading group and we can discuss different bits of research and different kinds of articles. And I'll probably set up a time that works for people in the trading group. We'll organize it either, frankly, sometime tomorrow after the close or on Saturday. We'll figure it out. Alrighty. I'll see you guys in a bit.